Hey friends, in this video, I'll be doing another reaction series to one of the public trades from Chicken Genius. I just want to try to learn what he's doing and just try to understand a little bit of perspective of where he's coming from. If you're new here, my name is JJ, and on this channel, I share my journey in learning options trading. Do consider subscribing, and let's begin with the video. On the 19th of January, Chicken Genius, or Ken, he mentioned that he'll be shorting Visa. FA here means fundamental analysis, and TA here means technical analysis. So FA, he says that retail sales are down, less TX, TX here I would say is transaction, right? So there's this guy, Terrence, right? Very interesting. He just put the tweet in ChatGPT and tried to decipher what he was talking about. If retail sales are down, that means generally the stock price may go down as well. So I think that's quite straightforward. The second point, OBV and MACD divergence plus resistance. This is the reason why he is shorting Visa. If you're new here and don't know what shorting Visa means, it essentially means that he's betting that Visa would actually go downwards. The tweet I would say is not really very clear. He doesn't give a clear price target of what price he thinks Visa will drop to. His current belief as of 19th January is that it will drop for a while. So that may present an opportunity for options trader to actually earn some kind of income. I'll just be going through what OBV and MACD divergence plus resistance mean in an attempt for me to try to understand his thought process. OBV here, as shown here in this ChatGPT answer, is on balance volume. At first, I have no idea what on balance volume means. If you can go to TradingView, you'll see this indicator which means OBV. The technical description of OBV is this. On balance volume measures buying and selling pressure as a cumulative indicator that adds volume on up days and subtract volume on down days. It basically adds volume when the price goes up and subtract when the volume goes down. The number here is not that important, it's 2.3 billion. So how they would suggest you to use it, right, is you just want to make sure the price of the stock and OBV is moving in the same direction to confirm a particular trend. The explanation of this website is quite clear. When both price and OBV are making high peaks and higher troughs, the upward trend is likely to continue. In this graph example here, right, when the price of a particular stock is going down, you should see the same correlation with OBV. OBV should also be going down. In the case where you see differences in trend of the stock price and OBV, that signals a potential weakness that the stock price might move in the other direction. This sentence might be the one that applies to what Ken is talking about. When price continues to make higher peaks and OBV fails to make higher peaks, the upward trend is likely to stall or fail. This is called negative divergence. So if you look at Visa, right, in the past few weeks, the price has increased from about 204 to 224. If I see the OBV, right, I only saw it increase ever so slightly. OBV is calculated from volume, and I think volume is a pretty straightforward metric. It simply means how many transactions that are happening on a single time period as selected. So in this case, you can see that on 10th January, there was almost 10.8 million activity on the Visa stock itself. Usually when you see a price increase, this will lead to OBV increasing, but then OBV only slightly increased, or if not, was stable. This might signal a weakness in the market. That is one of the reasons why he is shorting Visa as well. In my journey of learning options, right, there's so many technical indicators that you can use, and I think the most important thing is to just stick to a simple system that you believe and follow and have backtested over time. And another technical indicator that Ken relies on would be the MACD divergence. Personally, I have not used these indicators a lot myself, but if I'm not wrong, right, for a beginner, right, basically if you see this going down in volume, right, that possibly signals a weakness in the particular movement of the stock price. If this continues to go green and there are high greens like here, right, then usually that would be positive movement in stock price. If the intensity of this green bar is decreasing, right, then that would signal a weakness in the market. And I believe that is what Ken is looking at. There is some weakness over here until the 19th of January. The last thing that he mentioned was resistance. If you're not familiar with the concept of resistance, I've drawn a resistance line at 216. He has hit it multiple times. 1, 2, 3, 4, or 5, 6, a lot of times. So I think this might be a clear resistance line. Another resistance line that he might be looking at would be maybe at 229. I think the basic concept of a resistance is that the stock will face difficulty when it reaches a certain point. For the longest time since August 2021 or December 2020, right, you can notice that this serves as a strong resistance point before the stock price can exceed the resistance line itself. So I think this is approaching the resistance line. Unfortunately, he did not share the specific resistance itself. I think in the nature of Twitter, right, it's very difficult to put in so much information in so little text. For me to learn from him, I think it'll be really good if you can share a little bit more detail. Then again, I've been trying to follow his trades accordingly. I actually made a previous video on reacting on his previous trades. If you watch my previous video, right, all of his trades didn't pan out right. So he has stated here, I've stopped updating the sheet. The moment I started sharing the first 3 trades, it went south. So it's bad. No excuse, I'll do it privately. I mean, as a person who really wants to learn more about his thought process, I think that is a little bit sad because I don't get to see the full picture, right? Another thing I wished he put here would be how he shorted Visa. Maybe he did it via options trading, or he's just shorting the market directly. Right now, I'll just demonstrate how I would do it via interactive brokers. If it's shorting it, I think one way that you can short it is buy a put option over here. So right now, if I buy a put at 224, let's see how much option at 224 costs. Okay, there's no 224, so let me buy an option at 222 maybe. The rough price range that I would have to pay for this ranges from about $4.70 to $5.05 for one stock. Given that one option contract has 100 stocks, I'll need to multiply this by 100. So I'll need to pay about $4.70 to $505 for me to buy this option. This is the profile analysis of this. The date I'm making this video is 24th January. By February 8th, right, I need for the Visa stock to reach at least about $218 for me to profit. Right now, the max profit here is $21,000, but that is highly unlikely to happen because what is the likelihood of Visa dropping from its current price of 224 to about 160, right? So if it does drop, right, then this gives me a lot of upside, right? So if the price of Visa drops to 170, I can potentially earn 4.7k. But if you're to buy this, right, this is also a very risky way of shorting it because the upfront capital you must foot is quite large at $470. The maximum amount of money I can lose would be $505 in this case. By February 8, right, I need it to be at least below 218 for me to be profitable. Given that he actually made the tweet on 19th January, right, and right now it's a few days later, he has not gone in the direction that he wants. Past 3 days is just insufficient data for his hypothesis to pan out, right? The hypothesis of a diverging MACD is still largely true as well. I don't see any large movements in the OBV, which is the main technical analysis that he has done for Visa right now. So there is possibly still time. So instead of maybe choosing a expiration date of February 10th, then in that case, I might want to give more time for the stock to move. So maybe I can choose an expiration date of March 3rd and buy a put option at 220. If I were to profile it on interactive brokers, I would choose it 15 days before expiration, the mid of February, right? By the mid of February, how much must it drop to? It must minimally drop to about 214 for me to earn money from it. This is something that I'll not recommend any beginners to do. Ken himself is a very experienced person, so I would hesitate to just copy his trades because I think most importantly, you must have the conviction and most importantly, have the money to try it out. And in the worst case scenario, if you do lose all your money, right, can you suffer that loss? And I think that's one of the most important thing about options trading. One more caution that I would put to this trade right there is actually an earnings over here on the 26th of January, which is in about 2 days time. As a beginner trader, I'll avoid earnings at all costs. I don't really understand earnings that well because during earnings, right, this is where the company's stock price will be subjected to large fluctuations. So if let's say there's good news and they exceed their earnings, right, the stock price might possibly jump up all the way. And if it does jump up all the way, right, then I would lose a lot of money if I bought a put option. On the other side, it can also go down where it's also great, but I'm not that experienced to trade around earnings yet. So that's just my 2 cents on it. That's all for the video. Please subscribe to my channel and I'll see you in the next one.